This is the ES E-Mini S&P 500 Futures on November the 16th. On the same day, there are three entry strategies based on different buying forecasts. In this video, I'm going to show you how to find out. The first buy entry strategy is the directional bar upon market open. You can see that this is the first bar upon the market open at 9:30. It's a very strong bull bar and with 7.5 points. If you observe the market for long enough or ES E-Mini, and especially during the recent uptrend, you will see that the first bar or the first couple of bars or few bars, if they are continuously bull bars, they can serve as directional bar, and then that indicates the day is uptrend day. Right after the bar is finished, you need to put your buy entry at the top of this bar, so you should get entered immediately after the bar is finished, and then you're in a trade. You can target the profit to be the same as the height of this bar, or you can wait for a swing. If you scalp for the same height as this bull bar, you will get exit and take the profit at this bar, the fourth bar during the day. If you choose to swing your trade, you have to wait for the pullback and then exit at the second leg or even the third leg. The second buy entry strategy is to assume the trend is a breakout type and then trade the pullback. So upon you see these four bull bars here, and then there's a pullback. The pullback here, these two bear bars are very shallow. So right now you can assume the trend is kind of going to continue the same pattern like this four continuous bull bar. So you assume it is something like this. Here's the first leg here. And then there's a pullback, very shallow. So you will assume the second leg should be the same like the first leg. So it's gonna go straight up like this. If that's the case, then you need to trade the pullback whenever you see a good signal bull bar, and then the next bar, bull bar here, can serve as the signal bar. You put your buy order on top of this buy signal bar, and then the next bear bar is gonna trigger your buy order. So you're in a trade. And then you can choose your stop to be the low at this pullback. The reason you put your stop below the pullback here is because it is based on your assumption. So this buy entry strategy is based on the breakout type trend. The breakout type trend characteristic is the pullback is very shallow, and then it continues the trend greatly. So that's why you put your stop here. However, as the market goes on, you can see that you're gonna get stop out. Stop out is very normal to a day trader, and then based on this strategy, we assume the breakout type trend, there's nothing wrong to put the stop there. Another thing is that if you take the first directional bar strategy and then enter here already, this is a good opportunity for you to add more positions. If that's the case, that strategy is different from the scalping here, and then you can keep your stop at below here. So you won't get stop out if the trend goes down. You can sit tight because your first entry is very early, so the average cost for the two contracts are not that high, so you can sit tight and watch the second leg up. The second buy entry strategy is to trade the breakout type trend, and then comparing to the second one, the third one is to trade the pullback with a very normal trend. The pattern for the third strategy is a little bit different. Let's see. So the first leg is the same as here. However, we have a range, a small range, a little bit down here, and then the pullback is a little bit further, like around maybe 50% of the first leg, and then the trend will continue. And it is not like the breakout type, so you need to wait for a little bit longer for the market to reach your target. A very good way to tell when will the signal bar comes, we can use three pushes. This is very normal for the day trading. So we can assume that this bar is the first pullback. And then it goes up, there's a bull bar, and then there's another bear bar. This is the second pullback. And then the third pullback is very obvious, and then it's much further here. This is the third pullback. Then the next bar, this bull bar, is very strong bull bar, can serve as a signal bar. So you need to put your entry order one tick above this bull bar. And then the next bar will trigger your entry. You're in a trade now, and then you will choose the same thing to put your stop below this pullback. We have the stop at the low of this pullback is because that's based on our buy entry strategy. We assume it is a normal uptrend here. So, and also we assume this is the pullback. Second, the pullback can help you to protect your money. So you, at this moment, you really don't know whether the trend is going to reverse or it's going to continue. But however, based on your statistics of the previous historical data, you will see that if the market goes up this far, there is probably a second leg up. So the higher probability of uptrend continuation rather than a reversal. As it goes on, you can see the 3 consecutive bear bar, and particularly this bear bar, it goes down to almost the low of this bull bar, which is where your stop is, and then it's going to test your stop. So this is the accumulation of sell that they want to go down. However, the buyers are so strong, so they stop the sellers to go down that further. So you can see pretty much this is a very strong trend. Further on this chart, you can see there's an M shape. This is the first leg down, and then the second leg down. It's M shape. M shape is usually served as a reversal, the reversal of this small down leg. Another confirmation for the upper trend is here. You can see that these 2 bull bars here, these 2 bull bar, basically it's accumulation of the buying power. And also if you move to the up time frame, like a 10-minute time frame, you can see that these 2 bars will combine together to form a very good signal bar. So this is a very good confirmation for the uptrend. So your next entry will be here if you want to add up your position. So the second bull bar here should serve as the buy signal bar. As the market goes on, you're very confident there's going to be a second leg compared to the first leg here. So you can take your profit at the measured move. Let me show you. Again, this is the first leg. So we measure at the top of the first leg rather than here. And then we measure from the trend start here. You can see why there is a pullback here. That is because the other traders are using the same measured move strategy to take profit here. If you enjoyed my video, please don't forget to subscribe, like, and comment. You can also go to my channel for more videos. Thank you.